Hi guys, this is Simon with Trade and Perform Coaching doing the trade review for Friday the 27th of June, and it was actually, the market wasn't all that terrible. One of the things that's really throwing me right now, there's two issues that I think that are throwing a lot of traders. First of all, we have absolutely no possibility of correction, right? We just have not had any kind of downside movement whatsoever, and most traders would like to see that. Secondly, and I think very importantly, right, is that the speed at which the market's operating is about 25% of what it is normally, and the ranges have compacted. So that brings up a couple issues, right? It's very, very hard. And I'll just bring up a new chart here really quick to make this point of what's throwing, at least it's throwing me. I don't know if it's throwing all traders out there, but what makes it very hard is where we get this constant shift of all of a sudden we go from tight range, almost no rotation, right, almost no motion, to very wide range, right, good rotation, again, wide range, and then go back to very small range. Now, I know a lot of traders. I don't know very many traders that can shift gears that quick. I consider myself to be pretty good at what I do, and I have a very hard time shifting to super slow from fast. And if I was going to make a choice as to which one I prefer to operate in, I'd prefer to operate in a market where there's velocity involved. The reason why velocity is important is because it lets me see where there's an imbalance, where the aggressive buyers and aggressive sellers, where they kind of switch places, right? And where one group is coming in more aggressively than the other at key points, particularly support resistance zones, right? That gives me an edge that I wouldn't otherwise have, and the displacement, right, usually drives it just enough so I can catch those last few panic sellers at what I would refer to as kind of overstretched. You don't get that. You don't get that in a slow market, and so that presents a huge challenge for me. It doesn't mean the zones don't work. It just means that I so rely on that within my own internal clock that it makes it hard to make good decisions. So again, I wouldn't beat yourself up too badly if you didn't do great on Friday in either market, because it's difficult when you're dealing with, right, like, so this, and this is case in point, right? This trade required that you go long right out of the gate, long right out of the gate, long right out of the gate, right? First 5-minute bars were the hardest. This day, if you went long right out of the gate, you got run over. Really at any point. Of course, there was news driving this, but that doesn't matter either way, right? The second part, right, if you get accustomed to holding at the end of the day for a move up, right, those that held on this day, we flip-flopped and went to sell side here, we went to buy side here, neutral here, neither one, right? And obviously the buy side won out in the last hour on this particular location. And then if you look, right, rotation size here, if you bought, you could handle kind of any wiggle out of the gate, kind of took care of you. The first 5-minute bar was the low bar. Okay, here that first 5-minute bar low just simply ran you over. And then the last piece is the rotation size, right? Here, if you shorted after a relatively modest 5-point rotation up, you actually did quite well. In this particular case, if you shorted after a 5-point rotation up here, you just got run over through the course of the day. If you shorted let's see, 38 to 44, 6-7 point rotation here, really you had to cover relatively quickly. If you did it perfectly, you got 4 points, right? So shorts became difficult in this environment, right? And then the last piece is, normally when we get responsive sellers, right, we don't get these slow, delayed breakdowns, right? We get to sit forever. So imagine, this took 2 hours to actually roll to the downside. So imagine, you short about the same time, let's call it 10 a.m. here, and you have to wait, and you're looking for a break to the downside. That same 2-hour period, all it did was give you a loss. Same thing here. You shorted here, you waited that 2 hours, it handed you a loss. If you shorted here at that same time and you waited 2 hours, you actually made a profit. So there is no, what I'm trying to point out is that the timing rhythms are not staying consistent day by day, and that's making it much harder to get a good rhythm as to when to get long and when to get short. At least it is for me, right? Now, the setups themselves are working just fine. So, and importantly, NQ and ES are trading in harmony. So I'm going to go over both of them really quickly. And where I want to tie that all into, why that's important. Okay, so I have two objectives through this entire market. My first objective, my most important objective, okay, is number one, I want to get through the summertime without digging a hole. Most important possible objective I can have. How do I dig a hole? Overtrading a market that's having very small, tight rotations, using tight stops that are tagging me out very quickly, right? Number two, forcing trades that are not there, right? That causes traders to rack up losses. And then most importantly, and I want to go back to that chart actually now that I minimized it. I want to see if I can find it again. Okay, the most important thing here, it does you no good if on days like this, you're racking up, you're day trading in here and you're garnering 1 point here, 1 point there, right? A few points here. It does you no good if you're racking up 7, 8, 9, 10 points of losses on in these scenarios, right? If you're racking up just onesies here, what you end up doing is you're digging. Most traders are, and I'm referring to retail traders, right? They're digging holes in these scenarios, or they're getting extremely frustrated, right? One of the most you have three forms of capital you're trying to protect, right? You have obviously your trading capital, number one. Number two is your psychological capital, right? How much energy, or let's just call that energy reserve, right? How much energy reserve do you have to put into trading and making any one particular trade work? Most of us, particularly as we get older, have a limited amount of energy that we can put into trades. And then the third piece is I'm going to call it emotional. I'm going to separate that from energy and call that a distinct category. The emotional category, right? It takes effort to manage and go through an anxiety process of managing a trade, right? If you get in a trade here, right? Because if you're making money long, right, most of the time you've been having to buy up. There haven't been many opportunities to get rotations down. You're constantly, if you're not consistent in your stops, and most people I've worked with as a trading coach are not consistent in their stops, okay? What this develops is an enormous amount of anxiety. When you go into anxiety, you go into a fight or flight mode, and that's generally where traders come up with this "why did I do that trade" type of thing, right? And what all of this ends up doing in a slow market for an undisciplined trader, right, is ends up developing a boom-bust cycle, usually within days, right? But then you've also got to remember there's larger boom-bust cycles. There's guys right now that are just absolutely killing it. You want to know why? All they're doing is buying and holding long. They think, I've got this figured out. I can hold overnight. And they have zero trade plan, right? Well, you got to remember, it's not just making it through this couple of weeks or this couple of days with P&L. It's making it through year in, year out. So two things to remember. If you're not a professional trader, right, you make $100,000 one year and you lose $50,000 the next, it does you no good. You've paid capital gains on the $100,000, right? And you can't carry capital losses beyond $3,000, right, against regular income. Okay, so you can't go through boom-bust. Going through boom-bust cycles is devastating to a trading account. Secondly, when you start to count up the hours that you put into trading, right, if you're going through boom-bust cycles, you're essentially working for an extended period of time, in some people's cases years, for free, because you can't constantly stack profits one on top of the other, and that's my entire goal. So I don't care about outperforming in any one particular period, because I know that I'll get to markets where I'm just going to be nailing it over and over and over again. But my key is, very quickly, if things start going south on me, I withdraw very fast to protect both my emotional capital, my energy capital, and my trading capital itself, right? Because just like winning is a habit, so is losing. Okay, so let's go. I hope I'm helping people here, because when you're talking to yourself, it's always a little bit hard to tell. So I'm going to go into the trading portion here really quick. So first of all, a couple of things. This is first hour high right here. I didn't label it, so I will label it right now. I did not like where first hour high. Part of the problem is everything is kind of falling on top of itself because we have a lack of range, right? So I did not like where first hour high is. I did not take the first hour high B trap or A trap, which was right here. Obviously that trap paid relatively nicely on at least a scale, right? Number two, the plan was in the morning was to get long in the white zone for the most aggressive traders, or to get long at that 1836 and a quarter to 1838 and a quarter support resistance zone. Neither one was hit. It can be very frustrating. I am frustrated that I'm not getting my trade locations. I've been wanting to be long this market for quite a while. I'm willing to buy dips to the downside, and I'm going to speak to that on a week in a minute as to things I want to focus on here, right? But the fact is, we did not get any entry to the downside. There was a trap trade right here at first hour low in this area. Obviously, that paid very nicely. I was not here to take advantage of it, and time of day wise, it wasn't perfect. It was okay, but the rotation size was very, very, very small, and I'm going to have to make a personal adjustment and see if I can adjust these smaller ranges and take these trades or accept the losses that occur there. It's very hard for me to do, to trade these smaller ranges, emotionally adjust to them, and feel confident that I'm doing the right thing. And furthermore, right, when I'm helping my coaching clients, it's very hard for me to tell them, yeah, take a small rotation for a counter trade back to the other side and hold it, knowing that just a couple days ago, right, in the afternoon, we were getting these huge rip downs to the downside. That's very difficult for me to do, and I'm going to work on that in my meditation this weekend and in my mental preparation on perhaps cutting my trade size and taking these trades anyways, because they're obviously proving a very high win rate. Okay, so as to the zones on the upside, right, you can see this was the first move. I'm going to open this because it's all collapsed on each other. This is the first move into the zone, right? You can either count this or this. It just depends on the trader. You can either count this as the first move or this is the first move. Either way, they both generated a 6 to 8 tick rotation or more back to the downside, first time in, with relatively little to no risk. Okay, this was the first move into Globex high, and normally I would have taken that. I didn't because of the slow pace. And once again, the slow pace makes it very difficult to discern how much strength there really is behind a particular move. But the zone itself worked perfectly, exactly as it was planned to. Also, if we move later into the day, I hope this is making sense, right? This was the second area. I said that I would expect responsive sellers for it. As a matter of fact, what I said was, if you're a more conservative or a less aggressive futures trader, right, that this location, the back of 1954 in the live market preview, would be a great trade location. And sure enough, that did result in a more than 2-point rotation back to the downside. I think it was actually, for me, impossible to take that trade because I don't take counter trades in the last hour. It's simply my numbers don't support it, my risk doesn't support it. I also want to go over here and look at NQ. And by the way, I would expect over the weekend, barring bad news, I really would expect us to trade up through this area and up to the 1958, 1960. I don't see much keeping us from trading up into this area. Maybe I'm wrong, but I would definitely look for our first move up into that trade location in the overnight market. On NASDAQ, right, we had a very similar situation. We got some consolidation early in the morning. First thing I'm noticing, higher lows, right, and a series of higher highs. Now, the trap, which is one of my big trades on NQ, again, due to the lack of rotation, I want to show you all this in the morning. One of the things that is throwing me here a bit. Let's see if I can get this going. Okay. These are all nice fat rotations in the morning to work off of. Okay, so when I get little tiny rotations like this, again, this is very difficult for me to adjust to mentally. Okay, and usually what happens is traders that are good at this get blown out in this environment. Okay, counter trading at least, right? So my take on that, or my 2 cents on that, is if I'm going to be good at one of the two, I'd rather be good at these large rotations than I would at these little tiny rotations. I don't have a better way of explaining that or describing it other than to say that generally traders who do well here, making just a few points here and there, tend to get just smacked around very hard in these particular type of scenarios. So I want you to, what I would say to that is, don't get frustrated, right, when the market's not giving us what we want. The whole point of being a professional trader is understanding that the core of the market stays the same, that all the market can do is change the pace and the rhythm at which it gives you the information, right? But the structure itself remains the same, and I'm going to show you what I mean by that here. Okay, so let's get rid of this. First of all, I've been saying for days, upside easier than downside, right? So what was I looking for? I was looking for a rotation down to 3808. Was willing to take a trade to the long side there. I just never got the rotation down. It never even got close. There's absolutely nothing I can do about that. So checklist one, was I willing to get long? Yeah. Did it give me the opportunity? No. Does that anything to be frustrated with? No. I was on the right side of the trade. It just didn't give me the feed, right? Number two, I got a trap trade here. I realized a couple things. First of all, on the short side trades are going to be more difficult than the long side. I actually took two trades. One I got here for break even. I was able to scale 2, had an opportunity to take 3 points, right? This trade right here, this trap trade, I actually missed my first scale for 3 points and ended up getting stopped. But if you'll look, if I had followed through in my trading and simply taken this next trap that had occurred at first hour high, I actually would have ended up with a pretty nice profit on the afternoon, and it would have more than wiped out the losses over here. What did I have to balance in there? Well, what I was balancing was the market was operating very slow. It's a Friday afternoon. I expected the market to grind up. I already had one loss on the day. My objective, again, is not to worry about any one day, but to worry about over a series of trades. Usually my first 2 trades on the day are profitable. I'm not in a profitable scenario already to start the day. I'm all right surrendering this day with a small loss, right? And then moving on to Monday, Tuesday, Wednesday, Thursday, which should be much better next week. But I did no psychological damage. I did no emotional damage. I'm not frustrated. If I had taken that second trade, knowing we were moving to that we had a good chance of moving up through the upside, that sellers have been weak, and I had taken a second loss, it would have really put me in a very emotionally compromised place. I really would have been pissed, actually, at myself, and I don't want to put myself in that position. So I'm just going to continue through this difficult period to wait for my long side trades, right? When I see the short side develop, I'll know it and I'll take it. That's all I can say. You'll see rotations to the downside are going to be bigger, right? Rotations back up will be smaller. It'll be very, very clear what will drive that, right? And that's usually going to be accompanied by a gap down to start the day, right? And an inability to reach half gap or gap fill, and then we'll get selling. And then usually the way it'll work was that first down day will be a very big day, and then actually the easier trades usually to the upside over the next 2 or 3 days, and then we have continuation usually to the downside once we've broken. So there's no need for me to rush through that. So I hope that made sense. Right now, I was left with no opportunity to get long. I was not here for this downside break. This actually trapped over on ES and gave us an indication of the long side. I did not keep fighting it to the short side, and I surrendered relatively quickly. I took 2 shots at the short side. One was for a break even, and which could have been a winner. The second one was for a stop. And although it was relatively small due to the size, it was enough for me to go, hey, let's just move to Monday. I'm protecting my emotional capital, my trading capital, and my energy that I have available. So I hope that made sense. I want to take a look real quick at the bigger picture, and I hope this helps a couple of people. But when I look at the volume profile on both markets, let's see if I can get this here. Okay, let's get rid of all this. Okay, look, markets have a natural rhythm of 50 to 62% retraces. Okay, so right now, bigger picture, there's 2 areas that I would be very interested in. From this gap up point, from this low, right now, this retrace area, okay, so that puts us at 1927 to 1920. I would expect responsive buyers in this location, first time in, right? The other area that I would expect responsive buyers in, a little bit more aggressive location, but is this area right here from this current swing low to where we are right now, right? I would expect responsive buyers right in here as well. This 1936, excuse me, 1938, almost 1939, and 1934 location. Those are 2 areas that I would expect responsive buyers. I don't know for sure, like obviously if it were just this simple, everyone would be making money. Okay, so I'd have to go in and do work, but these areas are definitely areas of interest. This is a natural rotation for the market to take on a regular basis. To make a case in point on that, let me show you. Look at this right here. First time back around, right into that 50 to 62 retrace, and we launched right above. Usually, or generally, when this is going to fail, we usually tend to gap below a retrace point like this and then reject out of it back down to the downside. Until I see that happen, I'm going to assume that the long side is going to be easier than the short side. Additionally, if we look at NQ, right, same situation. Hold on one second here. Okay, if we look at NQ from structure, right, it's happened over and over again. We get 50% retraces all the way through this move, and getting close to that 50% retrace we just missed, right here. But you can see consistently that that's provided a potential, right, off of each swing low for areas. It obviously fails as you get smaller and smaller, okay, but as we pull this up, right, you're going to see that here, let me see if I can do that. That we have consistently come off this 50% retrace location. Okay, so again, the first thing for a downside is I'm going to have to see us get below and hold below this area, right, before we make a considerable move to the downside. My guess is this would be accompanied by a down day followed by a gap down where we push down and then push back up and then move to the downside. I don't expect this to happen very quickly. Okay, so obviously we're going through a series of higher highs and higher lows. We also, on NQ in particular, right, we've broken out. We started to form what looked like a trading range. Let's get rid of this stuff. We started to form what looked like a trading range, right? And we even failed. We had a failed breakout here. It looked like we were going to move lower. And really, I would say that that range is divided by these three areas, but this is the larger range, right? So the other thing that I know, in order to get a breakdown, right, is that I'm going to have to ultimately get below and close this open gap that's sitting right down here, right? So there's really nothing bearish till I get all the way up underneath this point. So where is this point? Well, this is 36.67. We're trading at 38.31. Okay, so that's almost 100. What does it say? 38, 37, 31. It's 160 points, right? NQ points away just to get a test down into this area. And you can bet your bottom dollar there will be most likely responsive buyers. That would be a big stretch back to the downside and then a move back up. Correction wise, that's the other way that we can look at this market, right? If we're trading at 38, 31.50 right now, okay, 76 points, okay, brings us a 2% correction. Right now, to correct down, to have the NASDAQ correct down 2%, only brings us right down into this, let's see, 3670, roughly 3650 location. Okay, and if you look, that puts us right into this first support area right here. That's a 2% correction. So it's going to take a lot for me to get bearish. Even a 2% correction just brings you right back down into support, right? There's not a lot for me to be bearish about. And if I was going to be working the trades, okay, and this is important to remember, this essentially turns into a mini coaching session, right? If you're going to push one side of the trade right now, right, you're going to push or try to push the long side of the trade. Now, there have been days where I've caught that top, or like I caught that trade where we had 24 and a potential 34 NQ points to the downside, but it was a one-day wonder, and this demonstrates that wonderfully. And let me show you where that occurred. Okay, it was really quite a perfect setup for the week. I want to go into that really quick, and then I will wrap things up. Okay, this move right here to the downside, this area, I was short right in, I want to say right here, I believe is where I had the short, or right here, one of the two. Okay, and I caught the majority of this move to the downside, but it was a one-day wonder. The next day came back just as strong, and I've been saying even on down days, the day after and the following days, actually over the past not just a couple weeks, but over the last 6 to 8 months, the easier days have been the moves back to the upside, right? So what would I do if I was a trader? I'd focus, right, on pushing my longs, right, and be much quicker to cover my shorts. At this point, there's nothing else. There's just simply nothing else to do. You just got to accept it the way it is. I'm not a fundamental analyst. I don't determine whether the market's too high or too low. I can tell you that crude oil is holding these highs, which generally means the world economy is doing well. That's usually the general correlation. Okay, and there's going to have to be some kind of piece of bad news to cause fear. The other problem we're having on the side of this is because there is absolutely no fear, we're not getting those rotations lower to give us the buying opportunity. But I have no idea what's going to cause us to get that fear put back into the market, but it sure would be nice to either one of two things happen. We either get so far overextended relative to where we are, where there actually is some weak hands to push us lower, right? Or we actually really do get bad news and the market pushes significantly lower off the bad news. But we don't have either one of these to help us right now. So until that occurs, right, the easier trade is going to be the long side. That's all there is to it. There's no point in fighting it. Even if you're a counter trader, of course, if you're skilled, you'll be able to catch some of these smaller moves to the downside along the way, but you've got to mentally be prepared, even if you catch a big move to the downside, to try to get back to the long side as quickly as possible. Anyways, my name is Simon. I'm with Trade and Perform Coaching. I certainly hope this helped. If you have any questions, you're welcome to email me at tradeandperform@gmail.com. You can also, if anyone would like a trial subscription to the live market preview, I offer 5-day trial subscriptions. Just send me an email with your Twitter handle, and I will get you set up. I hope everyone's having a great week, and we shall talk soon. Have a great weekend, guys. Enjoy the World Cup.